My next question is from Mackenzie Gray from Global, please.
Hi there. In the NPR today, there's a lot of talk about immigration and the really big boom that we've seen so far, in particular Chart 11 talking about GDP per capita growth. Is it your belief, Governor, that the Canadian economy in 2023 would have been in a recession without the increase we've seen in population growth? And for the Deputy Governor, too, can you just talk about, in terms of the housing front, how you see that immigration boom really playing out over the medium term for the housing market?
Well, why don't you start off on the housing, immigration, and effects on inflation?
Sure. So I'll take a bit broader step back on housing. So it's absolutely the case that housing's sensitive, housing activity, whether it's construction or sales, is sensitive to interest rates, sensitive to lots of other variables too, zoning, permitting, the availability of labor, and it's absolutely sensitive to population growth. And we've had record population growth in Canada against what was already a constrained supply. So we've had a long-standing housing imbalance in Canada. I'm from Western Canada. We've been feeling it for years. It's moved to other big cities in Canada in recent years, and during the pandemic, it moved even to smaller cities. So it was there before interest rates went into sort of emergency low levels. It's still with us now that interest rates have gone up. So it's a structural imbalance, and it would be a mistake to think that we're going to fix that miraculously with a single solution of interest rate changes. So shelter inflation has some similarities. It's absolutely the case that our interest rate decisions have a direct and near immediate effect on mortgage interest costs, which is a big part of shelter inflation. But there's other things inside shelter inflation. Rent, for example, rent continues to increase. Other housing costs, insurance, taxes, maintenance, those are all rising too. We can look past mortgage insurance to a certain degree, but those other costs are real costs for Canadians, so we can't look past them. So, I mean, the bottom line on housing is we are going to lower interest rates if the economy continues to go in the direction that we expect. That'll have some effect, that'll help on housing, but it isn't the magic solution. It would be a mistake to pin all of our hopes on our housing imbalance on interest rates. Canadians need a more fulsome, more coordinated policy response than that.
I mean, coming back to this issue of whether, should you look at per capita GDP or total GDP? I mean, from a monetary policy perspective, we got to look at both because they're both affecting the economy. And we've been, the whole reason to put in charts like Chart 11 that show you both per capita GDP and population and split it out is to sort of help explain that. If you think about what's happening for every individual household, well, that's like per capita consumption. So, I mean, what you see is that households have actually been cutting back on spending. That's been quite weak, but with high rates of immigration, more non-permanent residents coming into the country, there are more households. So, that's boosting GDP. I mean, you think of it from a perspective of a business, whether demand is up because individual households are consuming more or because there's more households, it doesn't make too much difference. It's still demand. And in the housing market, it's still demand for rent, it's still demand for houses. So you can't ignore, you got to think about both of these things. It is helpful to break it down because it helps understand how people are feeling, how people are behaving. When you look at consumer surveys, you look at surveys of consumer sentiment, you see they're pretty soft. And I think that reflects that on an individual basis, households are feeling the pinch. They are cutting back discretionary spending. We can see that in their behavior. For the economy as a whole, though, there are more households, and we have to factor that in. So, I mean, these are both things that we have to take into account. They're both things that are affecting the economy. They're both affecting inflation, and they're both ultimately affecting the path for interest rates that are going to get us inflation back to 2%.